do you see any potential headwinds from the election? I know a lot of people, a lot of investors expected some significant volatility following the results. It's actually been the opposite. The VIX has come down quite significantly since November 3rd. Is there anything that could be in store, especially as the headlines kind of continue to trickle out, in the weeks and probably for the months to come?
Yeah, well, I think that what you're referring to is a report that we came out with, suggesting that kind of what doesn't change after the election will be a lot more than what does change. Now, some things will change, but more things really won't change. And that really comes back to assessing what really matters most. And when you think about what matters most, of course, spending matters. But what drives spending is financial resources. And the financial resources come in three shapes. You've got money, you've got credit, and you've got income. And when you look at those, there's lots of money out there. There's lots of credit, mostly coming from the government. And that government borrowing has more than replaced the lost incomes that people have had at the same time as savings rates have gone up. And so that's produced an accumulation of cash on balance sheets that's completely unprecedented. If you look at the rate of accumulation of cash on balance sheets around the whole developed world, it's about 5 times normal. It could finance a couple of percent of GDP growth over a year. It's so much money. So there's a huge pile of money sitting out there as the inertia of the prior policies. And so if you could just, and there's really no sign of tightening on the horizon. You know, we're not going to get a fiscal tightening. We're not going to get a monetary tightening. There will be aggregate stimulation that continues. Even the Biden plan has long-term spending as a net long-term spending program. And so the big river is an overflowing river. It's not a drying up river. It's an overflowing river of liquidity. And then the effect of a shift in politics is somewhat of a rerouting of that river. But it's a big river that's overflowing at the banks. So given that liquidity, given the fact that you don't expect much to change from the results of the election, should investors just continue doing what they're doing? Should people be rebalancing their portfolio to favor other trends that might be in place, whether it be a potential vaccine, whether it be an end to this pandemic and that rotation that we were talking about a little bit ago? Well, I think we're in a much more nuanced environment than we're used to. The averages almost are not representative of anything. When you look at the equity markets, let's say if I take the U.S. and the U.K. stock market, they've been 90% correlated on a weekly basis, but the difference between the returns this year is 30%. If you look at the U.S. sectors, the sector moves are all 80% correlated, but the difference between, let's say, tech and energy is 70% this year. The difference between tech and banks is substantial. So it's actually which asset you hold really matters a lot more than that aggregate. And we think that'll continue because the forces that are really driving that have not gone away. The virus is obviously kind of the starting point, but the way that that's manifest is that the virus is the starting point that's affecting essentially spending patterns. But then the response to those spending patterns is a government fiscal policy to produce this liquidity. And what you have is the economic impacts, the adverse economic impacts of the virus are impacting some sectors and some countries a lot more than others. And the abundance of liquidity is benefiting some assets and not others. And you have storeholds of wealth, whether they be equities or gold or whatever, that benefit from the liquidity effects. And you have other types of assets that are hurt by the contraction in incomes. And so until the virus effect on spending goes away, that will just be really a persistent pressure.
Shepard Smith here. Thanks for watching CNBC on YouTube.